Good afternoon. My name's Jacob Field and I'm founder of Ripehouse. Just wanted to take the time to film a quick video. It's a real taster for the content that we're going to be putting forth on Wednesday evening at 8 p.m. Thanks for registering for the event. I'm really excited to take you through some of the research we've been performing recently, some of the content and tools that we use at Ripehouse to help the DIY property investor to understand remote markets, hotspot markets that they're really interested in looking at and processing and understanding, like a potential local would, working out the streets and areas in this suburb exactly that will match their required strategy, and then finding individual properties in those streets and areas that are once again matched to their individual personal investment strategy. So that's what Ripehouse is all about. It's helping the DIY property investor. So someone who's really empowering themselves with their education and knowledge to move forward and better their investment understanding, but also implementing that for success at a suburb, street and property level. So I'm just going to take the time to go through a couple of concepts really quickly today in preview for Wednesday. I will be going into a bit more detail on Wednesday, but I just wanted to take you through some of the tools that we've got here at Ripehouse and open your eyes up to what is potentially possible. Okay, so we have a robust suburb search engine at Ripehouse. So it doesn't, it goes a long way to replace, but it doesn't wholly replace, amazing research by people like Terry at hotspotting.com with his reports and hotspotting. But we do go some degree to having a metric-based approach to finding suburbs that are going to be most appropriate to your strategy. So we don't try and make things complicated at Ripehouse. We break an individual strategy into a primary strategy, whether that's capital growth, whether it's flipping, so renovating to sell for profit in the short term, or cash flow, helping the investor focus on that core strategy, and anything else is an added bonus, whether you can split the block or subdivide, extend, etc. So we do start our searches with selecting the primary strategy first, selecting a crime level that you're comfortable with. So we have very robust crime data associated with every suburb. Selecting price ranges for your suburb search. Selecting a catchment area. So in this case, I'm going to look for Queensland. I'll go with the Brisbane region. We can select any local government area or any distance to the CBD that we're hoping to find a suburb that matches our criteria. So with a capital growth strategy, just very quickly, we like to see suburbs that are trending upwards in sales volume in the previous quarter. Days on market is stable or decreasing. We like to see rent per week increasing in the short term over the previous quarter, and also rental volume stable. So when there's when those things are all combined and trending in the right direction, it's a real sweet spot for a suburb to have short-term capital growth. This is what this is returning here. So it's based on our filter there. We've got 132 suburbs it's found. It's ranked them in order, so a comparative analysis, suburb versus suburb, and we can then view the direct KPIs for that suburb here, the important KPIs to then deem the suburb worthy to continue further analysis. In this case, it's returned a number of suburbs here in the Brisbane region. There's actually a few clusters of these suburbs. I really like to see suburbs clustered with other suburbs that have high capital growth potential. That might be then grouped together for the same reason or the same the same amenity or the same infrastructure spend, etc. But you've got a lot of really nice key information like yield, average price, crime level, most in-demand property type, which is very relevant, and days on market for all these suburbs that are returned. So look, let's just select one here and go through and analyse. That is returning, as I say, the highest ranked capital growth suburbs in the catchment area that we nominate, in that case Brisbane. I like to see things potentially sometimes visually. So when I do that, this is now loading up the main suburb analysis map page within Ripehouse. This is the core of the software. This is really revolutionary software that has an amazing ability to help you understand these remote markets as a local would, to really have clarity and dissect a suburb, potentially how professionals are actually buying in the suburb. So buyers, agents and professional investors would dissect the suburb. This is helping you to do that and have clarity, so you're avoiding analysis paralysis. You're not spinning your wheels on a daily basis. You have a very clear and concise daily process And once that's enacted and you've found the streets that you're targeting in the suburb, you can apply filters automatically. So it's actually going to find only the properties that are most relevant to you each day, and you're able to select those and see them very quickly. So another nice little feature I might just show here is in Brisbane, I've now zoomed out on the map a little bit further. As I mentioned before, I like to see clusters of high capital growth potential together. What I've done now is I'm just applying a filter to the map. It's going to white out all the areas with low capital growth potential and highlight in blue the areas that have the most capital growth potential. And I like to see clusters of them. At the moment, there's a really nice cluster of high capital growth in the northern quadrant of Brisbane, just following the train line north. Suburbs like Chermside, Nundah, Kendron, out to Banyo and Northgate have a lot of potential at the moment that I see in Brisbane based on our methodology. This very visual cluster that you can see there using the dark blue overlays with high capital growth. Let's click on one of these suburbs. It's a suburb that I've been looking at with a lot of Ripehouse users recently, which is Nundah. Nundah is on the train line in the northern region. I want to give a quick demonstration. With Nundah as an example, you're coming to purchase for capital growth, but you do require, say, reasonable cash flow. Say plus 6% cash flow is your minimum requirement. You potentially are buying low to renovate and hold, and then increase equity through that renovation. So our primary strategy with Nundah is capital growth. Now, all streets and areas across Nundah are not equal. Some are more relevant to capital growth than others. So let's try and use the software to work out where potentially might be the best areas in Nundah to buy, renovate and sell, so a flipping strategy, where might be the best areas to execute our capital growth strategy, and potentially where might best areas to execute a cash flow strategy. So absolute high yields as a priority. So this will actually tell you where owner occupiers live, where tenants live, where public housing is, where higher yields are, where higher rents, higher incomes, higher prices, where all the amenities are. It'll tell you all these things visually on the map, and from that we can deduce which are going to be the best for our strategy. So to start with, let's get a bit of a familiarisation with the suburb. I'll zoom in a little bit. There's currently 97 properties that have been able to be indexed on the market for Nundah. We can view all those details here. We can sort the properties based on price, by the discounting amount, has it been discounted in the time it's been on the market, or by the actual days on market figures. So we can actually filter and sort properties very quickly there that are the current on market properties that our Ripehouse search engine has found. Any of these toggles over here on the left relate to overlays we can switch onto the map and start getting a feel for how the suburb is broken down. So if I click on the public housing overlay here, anything that's shaded in the red is an area of approximately 200 properties that has public housing. Anything without shading has no public housing there. So we can see that Nundah has 5% public housing as an average. And if I click on this really dark spot here, we can have this quick look information here that will actually tell us that this particular area has 21.6% public housing. So that's 1 in 5 houses are actually, or dwellings are public housing. That's going to have a really strong or a very noticeable effect on street appeal. Potentially, it's going to attract lower classes of tenancies in the street. Unstable tenancies, property damage, all these things associated potentially with high levels of public housing, which is fine. All we want to know as investors is where that potentially is, seek it out or avoid. So if you're seeking out public housing, you want to know how that public housing is going to affect the negatively affect the average price in that street. Based on our research, anything with over 20% public housing is actually going to have an 18% negative effect on average property prices in that segment compared to the suburb overall. So a drastic effect there. Definitely something to either know about and avoid and seek out. So in this case, let's say we don't want to have inconsistent tenancies. We want to have stable tenancies. We want to find the absolute cream of the crop streets in Nundah that are going to be driving the suburb's capital growth forward and not going to be the laggard areas or streets and hold the suburb back. We want it to be the absolute cream of the crop. And according to our research, to do that, we want to seek out streets that have lower than average public housing, because they're going to be where potentially the professionals are really driving towards, where they're potentially going to be gentrified and held up by these professionals. Let's seek those areas out that have really nice street appeal, nice, regular and reliable tenancies So in this case, let's avoid the areas with dark shadings of red. Is my recommendation. Another one, so this overlay here is the occupancy type. So anything in the yellow is predominantly rented, above average rentals. Anything in the green is predominantly owner occupiers. So we can see the yellow areas are flowing across the train line. Anything in the yellow is high numbers of units, as I mentioned, so we can all of a sudden see, right, owner occupiers are preferring to live further away from the train station, potentially in sparser populated streets, and anyone who's a tenant is preferring to live along the train line. So that's very important to know. For a capital growth strategy, we generally are targeting areas of high numbered tenancies. We don't want to be holding the only property in the street that is tenanted and therefore potentially has lower tenancy demand, because we might be having 6 months between finding a tenant. So let's seek out where the streets where tenants are demanding. Anything in the yellow is going to have great tenancy demand based on this data. Now I want to know where houses and units are located. So anything in the yellow has predominantly above average levels of units. Anything in the green has predominantly houses. So all of a sudden we can see very quickly that tenants are demanding units and owner occupiers are demanding houses. That's a very strong correlation. Some suburbs are very different, and the opposite is in effect. In this particular case, we now know that for a capital growth strategy, let's go for high levels of tenancy with a high number of units is what we're looking for. So that sort of tells us that information. Let's look in any of these yellow areas for those strong amounts. Sold price. Anything in the yellow actually sells for more than average in the suburb. Anything in the green is actually cheaper than average. This is anything shaded in purple is above average levels of rent that are achievable. Anything shaded in purple now is above average incomes that are achievable. So I like to see a correlation between high rent and high income. So I want to be investing in the higher rent areas of the suburb that are backed up by high incomes. That's going to potentially be these areas with high rent are actually pulling the whole suburb forward. Rental wise, they potentially are leading the suburb in terms of rental growth, especially when they're backed up by high incomes, which is therefore that rent's going to constitute a smaller percentage of their disposable income per week. But I also like to see high levels of tenancies in these streets as well, just to show that it's a commoditized type of rental property. It's not the only street with 5-bedroom houses in it. It's the type of property, the area that tenants are demanding. Therefore, it's going to be probably the most common or commoditized type of property in the suburb. In this case, let's look for areas with high units, high levels of tenancy, high rent, and high income. And that's going to be, my eyes being drawn towards these areas here in the middle. I'm not just going to be remembering all this and having to sort of jot it down. I'll show you in a moment a really quick little secret that can show us these areas. These areas is showing us now the highest yielding streets in the suburb. This is very important information. If the suburb overall was achieving, say 5% yield, let's find the actual streets and areas that are actually achieving 7% yield or more. We can be fussy and we can go to this sort of level of investigation. So these are all the toggles. There's plenty more to go through. I'm going to have this is a quick preview. This is our cheat sheet. So this toggle here actually shows us the areas in the suburb that are most suited to our strategy. So the blue areas, this blue area here is most suited to a capital growth strategy. There's 3 areas that are actually, including this blue area as well, that are most suited to a cash flow strategy. So high yield, high income, high rent, high percentage of tenancies. And the green areas are actually most suited to a flipping strategy. So flipping strategies require high levels of owner occupiers, high levels of houses, and a large price spread between unrenovated and renovated. So this is showing you exactly where those areas are. Now the really key thing is, and to improve your process per day, there's 97 properties on the market at the moment. The real benefit from Ripehouse, once you've understood these streets, is by being able to filter properties in and out of the areas that you're wanting to target. Now, I don't like to go against the grain. I like to look at there's plenty of information in a lot of these tabs. I'm really only just scratching the surface, but I'm just clicked on this suburb report tab here. It's giving us a lot of information around key investment metrics for the suburb, so volumes, prices, trending, vacancy rates, yields, lots of information. But what I'm really what I clicked on that tab there for to see now is I want to see what people are demanding in the suburb right now. So the most in demand properties in the suburb today are 2-bedroom units. Let's filter and only show 2-bedroom units located in the capital growth areas within the suburb. Okay, so a very, very strict requirement, 2-bedroom units in the capital growth area of the suburb. Let's see how many it returns. And it's probably not going to be many because I only noticed a couple of those red icons. Each of those red icons on the map, by the way, is a current property on the market today. The darker the icon, the more expensive the property is. So it's returned 3 properties here. I might just move this image of me. 3 properties on the market today. We can now view each details of those. There's plenty of other ways. We can remove by area. We can move properties from the map by area. We can remove by, I only want to accept 5% public housing. Let's remove all properties off the map that are in areas of more than 5% housing. Yield, plenty of filters that we can apply to start filtering properties. We can save those filters against the suburb, so next time the suburb loads, it automatically loads them, and we can add this property to our shortlist up here, so we can quickly look at the key metrics for those suburbs and compare them with other suburbs we're looking at and drill down into that very quickly each day. Okay, so here, let's just pick one of these properties at random. It's going to load up a very comprehensive panel full of information. What it's all about is assessing the value, the condition of this property based on the images. I'll assess this as in good condition. We can go into a lot of detail, and I will on Wednesday night, about how to assess condition, how to use information to leverage the conversation with the selling agent to achieve below market or at market purchases. In this case, it's about assessing the condition of the property. The engine actually does automatically assess the condition of the property. So I'll go into a little bit of detail about how our software does that, but we can choose to override that. We can see the full listing history of the property. So it was originally listed on the 30th of March. It's been revised on the 26th of April, so you can see the full listing history, you can see the discounting history. You can use that information to negotiate with the agent. So why has this property been discounted? It's demonstrating levels of distress from the vendor. You can really use that information to your benefit. So I'll go through how to do that on Wednesday night, how to use that information to really achieve positive conversations with the agent and have them then negotiate on your behalf with the vendor, is the way I like to operate. So once again, moving through this property details tab, we've got all the quick look information there for the suburb overall. For the area itself, so we're just doing a bit of a sanity check now. How does this street area stack up? Okay, so this is going to demonstrate to you how this street area stacks up. Bit of a check and balance. We've got a very comprehensive comparables engine within Ripehouse, so you can view all sold data in the property, in the suburb. There are a few that potentially missed out of that, but generally we get a very high volume of sold data. It will go away and find the top 6 most relevant comparables for you based on recency of sale, condition of property, property type, and distance away. You can then view each of these comparables. You can choose to agree and disagree with each comparable. If you disagree, you deem the property as a higher or lower class, you can remove that property and replace it with the next 7th highest regarded property. Once you're really happy with that list, you've got absolute control over it. It's not just a print off report type comparable analysis. Absolute control. You get very comfortable with assessing value in the suburb. You can pull those comparables together and start the appraisal process. So this is where the magic happens. Ripehouse is all about property and location. It will tell you how this property is located and how that location is potentially going to affect the appraised value of the property. So it knows this property is 1,100 metres from the closest school. Generally, for this property class and property type in this suburb, that's seen as a negative. It's a little bit too far away, and we know that potentially people will pay less for that property because of that distance. And we know in this particular type of suburb, it's a negative 8% on the appraised value of the property because of that location. Shopping adjustment is very good. It's 185 metres from the closest shop, and transport is 97 metres. So I'll go into a lot of detail on Wednesday night about how we assess location. Right on the doorstep of a school is not potentially or actually positive. It's too close. What is the sweet spot for each of these? So I'll go into a lot of detail. We can see all that information. We can see the appraisal, the asking price. We can see the estimated rent per week and yield figures. We can print all that off in a report. There's so much to this page. I could go on and on. I just wanted to give you a taster today. It's probably a little bit more than a taster. I do apologise about getting right into it and getting passionate about it. Wednesday night is going to be an amazing event. I'm really excited about helping you understand how to dissect these suburbs. There's going to be lots of great research that I'll cover. I'll sort of be giving some tasters in the days leading up to Wednesday. but it's going to be very action-packed and content-packed. So feel free to jump in with any questions. If you've got any questions about the software, feel free to ask me in the meantime, things you'd like to cover, even suburbs you'd like me to analyse in the webcast on Wednesday night. Let me know. Let's get the conversation started. And until then, happy investing.